Good morning, traders and investors. Welcome to Pre-Market Prep with StockOdds, Joel Alconin and Rob Friesen here at 10:30 on the hop. I want a big round of applause for my technical skills here. We'll pause there while you guys do that. You can clap in the chat if you want, or just send me a message. But
What changed? What's happened?
uh to be honest with you, I kept my Zoom meeting open from this morning.
Oh, I see.
So
Okay.
I was trying to reconnect to a Zoom that was
Okay.
not the correct Zoom. So
Okay. So this is a
yes.
fresh beginning here.
Yes, yes.
Okay.
So but this is the start of a new trend, Rob. This is going to be nothing but non-technical difficulties. But let me share my screen here, talk about the futures real quickly. Rob will get into the probabilities and see what we have going for the remainder of the session. We once again open up near the pre-market highs, can't take it out. 42.35. I know because I bought it on a potential breakout there. And finding support just in that three close area. So we're knocking on the door here, up 575. Going back towards the highs of the session. Also, just I could talk about rollover here in a little bit and the dynamics behind that, making kind of for the seesaw market. Crude trying to bust into that 71 handle, turned back at 70.62. Important to get a green close today. 70.05 was the close, trading above there. Gold struggling with 1900 once again. Oh, look at that. Well, I got silver, but gold, you have all these highs, right? Just 1900. That's your bogey. Silver, similar, 28. All those highs right there at 28. Bitcoin breaks down yesterday, right? But right back today, El Salvador, first country to approve Bitcoin is legal tender. So if you guys are going to El Salvador, remember to bring your Bitcoin wallet with you. Ethereum, that's up $21.50 at 25.35. And I'm going to bring in Mr. Friesen here. How are you doing on this choppy raise bound session?
Yeah, it is volatile. I mean, again, direction is not, something that we're too concerned
Right?
about, but you can use it, certainly. So again, when we opened this morning, what happened right away? You saw that the VIX, and again, if you use the VXX as your proxy, the VIX started moving higher, right away, signaling, that volatility was rising. And the reason that the VIX, we mentioned this before, but the reason that it rises is that, fund managers and so on, looking for that protection, buy puts, so that increases the volatility. We also saw the advancers versus decliners coming off very quickly. So that's another thing to watch.
Okay.
The trend also, but it was a little bit choppier, but definitely those two, the volatility was rising and the breadth of the market was declining rapidly. So that tells you, what's happening right away in that first 15 minutes to
I was
half
just going to
hour.
ask you. So 15 minutes is where you really like to key those, right? And then do you have them all up on one screen? Do you have, just like to get, people like to know setups and everything? Do you have
Well,
all there bunched together, or how do you
the
do it?
most important charts, if you're going to be, I have a lot of charts on my screen, but the most important charts are obviously the ones that are leading indicators, something that tells you, what the change of attitude, sentiment, different players, what the institutions might be doing, things like that. So, you know, stock charts don't help you that much in terms of what's going to happen next, but certainly the leading indicators do. And so if you see a change, like if the market, here's an example. If you see the market, selling off, and volatility has been rising, and then all of a sudden volatility starts turning over, but the market's still selling off, you obviously have that divergence. There's one indicator that's telling you something different than what the market's actually doing at that moment. So there's, like in poker, we would call that a tell. There's a tell. And you want to use those tells to your advantage, meaning that, you know, you can position yourself, you can wait for the inflection point, you can start looking at, one of the keys is looking at some of your symbols that might be down in ATR. An ATR is average true
Yep.
range. We use it quite religiously. And so it's just a measuring stick of each stock's volatility. So if you're, even if you're in a pair, let me give you an example here. You're trading, you know, a correlated pair. Maybe it's Royal Dutch A and Royal Dutch B, okay? A combination of two classes of stock in the same company. And I know Dennis has mentioned that before on the show, you know, different types of pairs like that. But anyway, that pair doesn't move much as a spread for the day, you know, let's say 10, 15 cents of movement, which isn't a lot. But think of it like this. If you were long one and short one, and the spread, you know, got to a discount, so 15 cents, you know, lower than where it had been the day before, and at the same time, your stocks are down an ATR, each of them, because they've
Yep.
moved together. What would that give you the opportunity to do?
Fade.
Well, you could say, okay, I'm already long and already short, and the market, I'm seeing a change in volatility, giving me my warning sign. I'm also seeing a change maybe in the cumulative tick or the breadth of the market, something like that. You might be looking, if you're able to watch the futures, you might already see futures starting to turn, whatever. But then at that moment, you could buy in your short side because the spread is at a discount and the stocks have moved down an ATR. So what is your, you know, implied risk at that point? You could easily, if you had the locates, you could easily short again the other side if you're wrong. But what if you're right? Think about it like that. What is the payoff if you're right?
The it's greater than, I mean, the payoff is greater than the risk reward's much better if you're doing
Well,
it if it's already
absolutely,
right.
because think of it, even if those stocks were to retrace half an ATR back, so you get a 50% retracement or a Fibonacci 1/3 or 2/3 type retracement back, right?
Yep.
Which is quite normal, especially if the session is already volatile. Today we've had, you know, up and down equal amounts quite frequently here this morning. So at that point, you know, you're not risking much because number one, your spread was already advantaged for you to take the spread off. You could have taken it off completely, right? And you would have been fine. You would have made, maybe you had 2,000 shares aside, you would have made 15 cents. Okay, well, you know, it's better that it moved the amount that you expected. So the spread was at a discount. You could have unwinded it and you would have been happy. But what you do first depends on what the context is. So you're looking at the spread has come in, the stocks have declined, they're down in ATR, which is a full unit of volatility, let's say. So to buy in your short side on that inflection point of the market gives you an edge, gives you that advantage. Now, as they rally back, you have two options. What are they? Well, number one, you could reshort what you had taken off, put the spread back on, or you could just take the other side off, the one that was rallying with you in it and making money. So you only have the long side. So what's going to be the primary decision maker? What is the core decision maker when you decide to act by either reshorting or just taking it off completely? What's the core decision maker? First, it's what the spread number is. So imagine this. The spread comes in 15 cents,
Yep.
which doesn't seem like a lot, but that's the type of pair it is, and you usually use more capital in it anyway. So it comes in. Now let's say the spread expanded back out, meaning that stock A rallied more than stock B. it's then advantageous for you to re-short because your spread is widened back out. But now if your spread stayed discounted, then it would be better for you to take the other side off, because that means that side rallied more back. Okay, so you got a horse race, you got two stocks. They're not going to move perfectly in sync, right? They're not a band. They're not going to move perfectly in sync. Okay, they're going to fluctuate a bit, and one might, run ahead of the other one. So what you do with your pair trading is really centered around two things. What is the spread number? Is it advantageous for you? Does it give you an edge? And number two, what is the market doing? And number three, I'll add, is again what the ATRs are. So you got the spread number, the market, and the volatility. And you put those three together and you have a symphony. You have an orchestra working and humming along perfectly. If you violate one of those, you're not optimizing your business. Let me give you an example. If you just have an opinion at the bottom of the move and you go, well, I know which stock is going to move, or I know the market's going to do this or that, and you go opinionated, you're going to disadvantage yourself, right? But if you just acknowledge what the market's doing, acknowledge what the volatility is, acknowledge what your spread price is, then you can act on that information and you're going to be much better for it.
Yeah, and what you're talking about here is just staying within the probabilities, right? You get these huge moves in these volatile stocks, but when it turns, it turns. What you're trying to do and what you're trying to people here is it's teach them to be more methodical and look for the
Right.
reversion of the mean and
one practical nutrition thing. You got to drink a lot of water when you're trading. Do you know why?
Take the heat.
No, because your brain, it's a mental exercise, right? Trading, and any level of dehydration will affect your decisions. The brain requires a tremendous amount of water when it's under stress or having to consider, A versus B, 1+1. It doesn't matter what it is. You need a lot of hydration, so make sure that you drink water. Okay.
Okay. All right. Just a
Can you
quick
talk about the rollover stuff? I think
Yeah,
people
yeah.
need to be educated on that level.
Yeah, I just I brought up the S&Ps here, and I've talked about it a few other times, but I just want to reiterate here a lot of the action here that you're seeing in the S&P futures. Today is actually the last day, just officially, that June is going to be the front contract. Now, what I mean by the front contract is where the majority of the volume is traded. Financial futures trade March, June, September, in December. So if institutions or traders want to roll over their position, right? Exactly the way it sounds. If you're long the June, you need to sell the June and buy the SEP. And then conversely, if you're short the June, you got to buy the June and sell the SEP to maintain that same position. And the spreads start out wide, right, at the beginning of the expiration period because there's the time value. Well, there used to be the time value of money, but what you're seeing now, and especially that air pocket that you saw yesterday afternoon when we had the break to the low, there was actually nothing there in the there was no news, there was no really catalyst for that decline, and it could have just been someone jockeying between the two positions. Now, Thursday, tomorrow, September will be the front month contract, and then a lot of the traders officially start trading it on Monday. Right now, the volume is still in the June, but you'll see that switch over to the September. You see this in crude oil futures too, but they have a monthly rollover. They trade the futures every single month, so it's kind of tricky, and it really it's kind of aggravating when you're doing levels because you're changing them every single month. But Rob, I have the screen here. Do you have any setups from this morning that you would like to
Oh, sure.
discuss?
Let's talk about something here.
Yeah, let's talk about a couple setups and then other couple
Well,
things here on my radar.
do you want me to grab the screen here?
I
Okay.
release the screen to you.
All right. Let me just show you guys something here. So so this is from StockOdds, just for the open to close today. Hopefully you can see the screen. Okay, can you?
We can see it, sir.
Okay, so it's TLT, the odds for today, and XLF, the odds for today. So the TLT bullish 56.5 from open to close. Also, we could do close to close, different ways to look at it. But XLF was on the fence. But here's what happened. Take a look at, well, I can actually show it here. So let's take a look at TLT. Oops. Okay, so obviously we have some catalyst, some backdrop to this in terms of interest rates and things like that. So the TLT is rising, right? And when you see that, the yield is declining, and that's not necessarily the best for money-centered banks. So there'll be this relationship on how well the banks do. So I find that there's a good advantage if you see this condition pre-market with TLT, and especially if you haven't got in yet out of the gate, it's confirming that. And that is come off its highs, yes. But a lot of the money is made in that first half hour to first hour, just sort of getting that trend right in a sense of the instruments that you're trading or the baskets that you're trading. So when we go and look at XLF, you can see it had a little bit of volatility at the open right here, but already pre-market, you see the decline. So the TLT which is a 10-year bond ETF, was rising and the financials were selling off. Okay. And that has continued through that first half hour of the day where your bigger bang for your buck is anyway. Again, so StockOdds gave you an indication ahead of time that there may be some
weakness
opportunity, right?
Yep.
I mean, it's not perfect, but there may have been some opportunity. Back to that. So then when you have that as a backdrop, you should run the screens on your ETFs anyway, just to sort of get the context for the day, because even if you're not trading them, what is one thing that you want to do with some of these ETFs? You might want to hedge some of the sectors that you're involved in. I don't get too much into the industry ETFs like the iShares and things like that, which you can, but at least have coverage for your trades from the sector ETFs. There's 9 of them that are liquid. The telecom one's not. So we use the 9 sector ETFs, and that works fine. So XLF, if you were trading any financials, you should already be aware. So it's not a bad idea to run all of your ETFs to see what is the odds for the next time frame that I'm trading in. What is the odds open to close? What is the odds for 3 days? Because either you can create some trades related to those, or you can use them for hedging some of the other stuff that you're in. Make sense?
Yep, sure does.
Let's look at the screen. Let's see here. So we got some symbols from this RSI here. What we can do is just take a look at some of them and see.
Yeah, I got a stock. Would you want to go to either next or after this one?
You can go to it now. What is it?
Andre asked us. I said Sunday night we had discussed a potential bullish reversal for Home Depot,
Oh, I see.
HD.
Okay.
And good, Andre, keep us in the loop here.
Yeah, well,
And
that's
I'm
nice. So
yeah,
we're 3 days later now. By the way, Wednesday is not one of the stronger days for the month of June, just FYI.
okay.
It's not one of the, Wednesdays tend to be softer than what we see on Tuesday or, Thursday or something like that. So just keep that in mind. But let's look at our 3 days for Home Depot on an RSI.
I mean, it is tight. I mean, this is
So
kind
yeah,
of
it's 50. I mean, it's not like we're not sitting here screaming at 60 or 70 odds. I mean, it's 51.3 over
okay.
the 3 day, right? And average performance and sharp is actually negative. So again, when you see that you have maybe some bullish odds, even if slightly, but you have negative outcome, negative performance, it doesn't make it
That
super
attractive.
attractive, right?
Yeah.
Now, if we look at it just on an open to close basis today, what is it saying? It'll probably drop the odds.
Yeah, it's
No, it's actually raised them 55.34 today, but still negative performance, negative sharp. If we go to some other screens, we could look at, say, you can run your own favorites, whatever you want in this database. Some people just love percent Bollinger Band, and some love RSIs. So on an open to close basis, Home Depot was 66.2, which is higher, and the outcome was positive, right? So let's just look at, if this information was something that you were relying on, then you have some choices of like buying it at the open or waiting to get a pullback. And if you could get a great discount on the day, let's say when the market's down, things are starting to turn, Home Depot's down, things are starting to turn, then your expectation for the day is still there. So again, expectation and starting point. The trader gets to determine the starting point. Can be on your wish list, because this is what we do for like dividend paying stocks. If we see a dividend on the horizon that we think will attract some interest from investors and so on, to say, oh yeah, a reminder, dividends coming up, I really want to be in that stock, and we see that sort of positive drift, what you're looking for is a discount between 3 days out or
ahead of
7 days
time.
out
Yep.
even, and you're looking for the discount. You're looking for a down open, you're looking for a down day and a reversal, and that's how you get started into entering that position. So if we go out to the 3 days off the Bollinger Bands on that Home Depot, let's take a look and just see what might be left on the cards here. The odds are even rising higher to 81.3, average performance 1% sharp. So we're seeing a backdrop there. I'll bring the chart up. Let's take a look at it. Let's see.
Yeah, I'm trying to
Let's
glean
take a look.
something,
I mean,
yeah, from the dailies here. And I
so
mean,
we're down in this area on the Bollinger Bands where historically, if it has ever been there, that's where you're getting that outcome from. So again, let's look back even at the chart here, right? We've had a penetration of the band, which has resulted. We've had a tag of the band, still had a good outcome. Penetration, penetration, penetration. And so it's pulling from history. This is short amount of history, but it's pulling from our 2000-day look back period and saying that when it gets into this area, the outcome for the next 3 days is substantial. It's generally been positive. So that's the backdrop that you have to frame this with, is that it's in that area where the odds or the probability are still favorable. That doesn't mean it will work out for you, but I would rather than trying to figure out the chart, I'm just going based on what it has done historically. Now, if in the perfect world, you might say, okay, well, let's compare Home Depot to Lowe's, right? Let's get some perspective from the group. I mean, those are the two dominants in the group,
yep.
right? So let's just take a look at that. Okay. and see
Just I'm just looking at
which is the better horse here.
yeah, which one? Would I'd have to say the Home Depot.
Okay, well, Home Depot is showing 81.3 and Lowe's is 52.4 for the same three-day outcome. So, and that's the close of yesterday to the close of Friday, right? So that's what that's saying, is that Home Depot should outperform Lowe's. So you can see how you can use this database for pairs. I mean, we actually have the ability here to do pairs anyway. We can do pairs or stocks against the SPY. Everything is comparative to what the S&P 500 ETF is doing. But just looking at that, you can see the opportunity to say, you know what, maybe there is, maybe the group is not performing super great because it's all about what? The stonks. It's all about
Yeah.
something else, right? So maybe the group isn't performing super well. You know, these are big cap stocks. There's not as sexy right now. But if you wanted to pair them, there may be an opportunity for Home Depot long and Lowe's short, just according to that, right?
Okay. All
And
right.
then, and that's only looking at it on one indicator. I tend to look at sort of what's the RSI, what's the Bollinger Bands, just to get that perspective of relative strength versus standard deviation is really what you're doing.
Okay. All right, Rob, we got about 4 minutes here. So just want to just cover a few stocks heading in to the 11 o'clock, where we're going to be done with today's pre-market prep with stock odds. Be sure to check out stock odds, mystockodds.com, to get a better idea of
We've
all
had
the
we've had some really good reviews of the seasonality course. I really recommend that as a great starting point for people. Is what is the backdrop of what happens month to month, week to week, around special events, turn of the month effect. Just having that as a context, as a backdrop, can be so helpful for you guys.
Okay.
So to me, that's sort of a minimum starting point. Then you get into, much more than that. So, okay.
All right, you can use the PRPMRN20 as a discount code on that. Rob, release the screen to me, and I'll just
Sure.
got a few tickers here I want to cover here going into the end of the day.
Here you go.
Andrew says, thanks a lot for your insights. I'll keep an eye on it and see if I can get a dip. All right, I'm going to share my screen here, and Investor Day, I guess, is not going real well here for UPS. It finally took out that $10 or 210 support levels under pressure here. So, for you are wondering why UPS is taking a lick in here, that's a possible reason. Big run up, and not much support in here as well. What else did we have here? Someone mentioned WATT. I'll just take a look at this one. That's a mover. Let's see where it's trading. I know this one's always has big moves, but let's see what the price action for today. Opened up near the low, made that run to 388. Nothing there. But we're drifting. We're just kind of mid-range on here. So for this one, you've had what 50-cent range. I'd say just short term, got to get back above and hold 355 to make a run at that 388. But trading action could be done for the remainder of the day on that one. Intel, I was asked if it clears 58. Well, doesn't look like it's clearing 58 anytime soon. And what you need to do is you need to get up here and have the daily ranges a little bit closer to that. And then, unless obviously is there news. So, not looking for this to bust through 58 anytime soon. After that, if you did get like a big move after hours, some kind of upgrade or upgrade, I'd be looking at 58.30 to 58. Let's just call it 58.35. And last stock of the day, WWE. They should cut more wrestlers. Big gap up in this one. The whole day has been in this 15-minute bar. The first bar of the day had to pop up, and I think for this one too, I would just stick or looking at this on a daily, looking mid range. You've had 63 to 71, 8 point range. So four, long as we heard hold 67 here, looking to perhaps go up and test that 70, 72. All right, Rob, thanks for joining me here on this pre-market prep with Stock Odds. Hope we've given you guys a look at trading statistically a little bit differently on things. And we'll be back with you tomorrow at 10:30. Thanks for
Right.
joining us.
Thanks.